Based on the historical data and forecast, Bitcoin shows a fluctuating trend with a general upward bias. The RSI values have mostly remained between 43.5 and 61.7, indicating neither strong overbought nor oversold conditions. However, the recent dip in RSI towards the lower end suggests a potential oversold opportunity. Combining this with the Bollinger Bands, we can see that the price has been oscillating within the bands, and currently approaching the lower band. Therefore, I recommend a long position with an entry price of $67,400. To manage risk, a stop loss should be placed just below the lower Bollinger Band at $67,000. The initial target price will be the middle Bollinger Band, $68,300, providing a quick profit if the price rebounds. To further maximize returns, we can implement a trailing stop-loss strategy. Once the price reaches $68,300, we can move the stop-loss to $68,000, securing some profit while allowing the trade to continue if the upward trend persists. If the price continues to rise, we can adjust the target price to the resistance level of $70,800. However, considering the forecast data showing a downward trend in the short term, it's prudent to keep a secondary target at $69,000. This layered approach balances profit-taking with potential for further gains, adapting to the dynamic market conditions. Based on the historical data and forecast, Ethereum shows a generally upward trend, breaking through the resistance level of $2,070 on March 15, 2026, and reaching a high of $2,340 on March 11, 2026. The RSI indicator fluctuates between 46.0 and 66.4, indicating periods of both neutral and slightly overbought conditions. The Bollinger Bands have widened recently, suggesting increased volatility and potential for price movement. Considering the forecast data, which predicts a slight downward trend initially before stabilizing around $2,060, I recommend a long position strategy focusing on capitalizing on potential rebounds. Specifically, I suggest entering a long position at $2,060, coinciding with the forecast price on March 29, 2026, and the lower Bollinger Band. Set a stop-loss order at $2,030, just below the recent low and the forecast price on March 23, 2026, to limit potential losses. The target price should be $2,130, aligning with the previous support level and a reasonable profit margin. This strategy combines the RSI's oversold signal with the Bollinger Band's indication of potential price expansion, aiming to capture short-term gains while mitigating risk through a well-defined stop-loss. This is a high-return strategy with a moderate risk. Based on the historical data and forecast, BNB shows a declining trend. The price has been fluctuating within a range, with support around $612 and resistance around $628. The RSI indicates that the asset is generally within the neutral range, occasionally dipping into oversold territory but not consistently. The Bollinger Bands suggest periods of volatility, with the price occasionally touching the upper and lower bands. Considering these factors, I propose a cautious strategy focused on short-term opportunities. My strategy involves a combination of RSI and Bollinger Bands. We will enter a long position when the RSI falls below $45, indicating an oversold condition. The entry price will be $623. The stop-loss will be set just below the support level at $610 to protect against further downside risk. The target price will be $635, aiming to capture a moderate upward movement. This strategy will be executed for a duration of 5 days. If the forecast indicates a continued downward trend, we will consider a short position when the RSI exceeds $70, with an entry price of $624, a stop-loss at $630, and a target price of $615. This approach balances potential gains with risk mitigation, aligning with a high-returns investment expert's perspective. Based on the historical data and forecast, XRP shows an upward trend, although with some volatility. The RSI consistently remained below 80, indicating that the asset is not currently overbought. The forecast prices for the next week are slightly declining, but still above the support level of $1.34. Considering the Bollinger Bands, the price has been fluctuating within the bands, and the forecast suggests it will stay near the center. My strategy will be a combination of RSI and Bollinger Bands. I recommend entering a long position at $1.38. Set a stop loss at $1.33, just below the lower Bollinger Band, to mitigate potential losses. The initial target price will be $1.46, aligning with the recent resistance level. To refine the strategy, I will use the RSI as a filter. If the RSI drops below 30, consider exiting the position or tightening the stop loss. If the price breaks above the upper Bollinger Band and the RSI exceeds 70, a secondary target price of $1.5 could be considered. This combined approach leverages both momentum and volatility indicators to maximize potential gains while managing risk. The portfolio will be 60% long XRP, 20% in stablecoins, and 20% in other cryptocurrencies for diversification. Based on the historical data and forecast, Solana shows a generally upward trend, although with some volatility. The RSI consistently remains below 80, suggesting the asset isn't overbought. The forecast for the next week indicates a slight downward trend initially, before potentially stabilizing. Considering these factors, I recommend a moderately bullish strategy. We'll employ a combined RSI and Bollinger Bands approach. Initially, I suggest waiting for the price to pull back towards the lower Bollinger Band, around $86.5, which also coincides with a relatively oversold RSI reading. Enter a long position at $86.5, placing a stop loss just below the lower Bollinger Band at $86.3 to limit potential losses. The target price for this trade will be set at $90, aligning with the forecast and the upper Bollinger Band. This provides a reasonable profit margin while acknowledging the potential for further upside. If the price reaches $90, consider taking partial profits and moving the stop loss to break even at $86.5 to protect gains. This strategy combines trend analysis, momentum indicators, and volatility bands for a balanced approach. The combined strategy allows for capitalizing on potential upward movements while mitigating risk through strategic stop loss placement. Based on the historical data and forecast, TRON shows an overall upward trend. The price has been consistently testing and bouncing off the support level of $0.306. The RSI values have mostly been above 50, indicating bullish momentum, and have even breached the overbought level of 80 on several occasions, suggesting strong buying pressure. The forecast for the next week projects continued price increases, reaching $0.32. Considering these factors, I recommend a long position strategy. We will enter a long position at $0.31, placing a stop loss order at $0.306 to protect against a potential reversal. The initial target price will be $0.319, aligning with the forecast high for the week. To refine this strategy, we'll incorporate the Bollinger Bands. The price has been fluctuating within the bands, and when the price touches the lower band, it often bounces back. We will use the RSI and Bollinger Bands to confirm our entry. If the RSI dips below 30 near the $0.31 entry price and the price touches the lower Bollinger Band, it strengthens our conviction. If the price reaches $0.319, we will move the stop loss to the break-even point, $0.306. If the price continues to rise, we will set a second target price at $0.32, capitalizing on the projected forecast high. This layered approach balances risk and reward, aiming for high returns while protecting capital. Based on the historical data and forecast, Dogecoin shows a downtrend in the short term, with the forecast price decreasing from $0.0934 to $0.0885 over the next week. The RSI consistently remains below 70, indicating that the asset is not currently overbought. The Bollinger Bands are narrowing, suggesting a period of consolidation before a potential breakout. Given these factors, I recommend a short selling strategy with a conservative approach. Enter a short position at $0.0934, placing a stop loss order at $0.0951, just above the recent resistance level. The initial target price should be $0.0885, aligning with the forecast price at the end of the week. To refine this strategy, we can incorporate RSI signals. If the RSI drops below 20, indicating an oversold condition, consider covering the short position and potentially initiating a long position. Conversely, if the price touches the bottom of the Bollinger Bands and the RSI is below 40, it could be a good entry point for a short position. Adjust the target price based on the support level of $0.0841. If the price breaks below this level, consider adjusting the target price to $0.0841 for a more aggressive approach. This blended strategy aims to capitalize on the short-term downtrend while incorporating RSI and Bollinger Band signals for enhanced risk management and potential profit optimization. Based on the historical data and forecast, Bitcoin Cash demonstrates a generally upward trend with periods of consolidation. The RSI consistently hovers around the 30 to 50 range, suggesting neither extreme overbought nor oversold conditions for most of the period. However, the recent dip in RSI values indicates a potential short-term oversold condition. Combining this with the forecast, which predicts a slight downward movement initially followed by stabilization, I recommend a long position with a cautious approach. Entry price should be $455+. The stop loss should be set slightly below the support level at $444+ to mitigate potential losses if the price declines further. The initial target price should be $463+, aligning with the forecast high for the week. To refine the strategy, we'll incorporate the Bollinger Bands. The price consistently trading within the band suggests a period of consolidation. If the price touches the lower band, it can be considered a buying opportunity. Given the current RSI and forecast, I recommend a layered approach. If the price reaches $455+, enter a long position with a stop loss at $444+ and a target price of $463+. If the price continues to fall and touches the lower Bollinger Band, consider adding to the position with the same stop loss and a higher target price of $474+. This layered approach allows for capitalizing on both the initial forecast and potential rebound from the lower band. Based on the historical data and forecast, Cardano shows a declining trend. The price has been fluctuating within a range, with support at $0.246 and resistance at $0.263. The RSI indicates that the asset is currently in a neutral to slightly oversold territory, with values ranging from 39.7 to 58.2. The Bollinger Bands show that the price is approaching the lower band, suggesting a potential oversold condition. Considering these factors, I recommend a short position strategy. I propose entering a short position at $0.265. A stop loss should be placed at $0.268 to protect against a potential upward reversal. The initial target price is $0.254, aiming to capitalize on the downward trend. To refine the strategy, I will incorporate RSI and Bollinger Band signals. If the RSI drops below 20, oversold, and the price touches the lower Bollinger Band, it could signal a potential bounce. In this case, I would consider covering the short position and potentially taking a long position with an entry price of $0.245, a stop loss at $0.244, and a target price of $0.252. However, given the overall declining trend, the primary strategy remains a short position. The portfolio will prioritize the short position at $0.265 with a stop loss at $0.268 and a target price of $0.254, with a secondary consideration for a potential long position at $0.245 if the RSI and Bollinger Bands confirm an oversold bounce, with a stop loss at $0.244 and a target price of $0.252. Based on the historical data and forecast, Chainlink shows a recent downtrend, with the forecast indicating a continuation of this downward movement. The RSI values have fluctuated, but haven't consistently reached oversold levels below 20, suggesting limited opportunity for a strong reversal play. However, the Bollinger Bands indicate potential for short-term price swings. I propose a cautious short-term strategy focusing on the forecast period. Entry price will be $9.14, placing a stop-loss order at $9.4 to protect against a sudden upward spike. The initial target price will be $8.72, aiming to capture a portion of the predicted decline. If the price reaches $8.72, consider moving the stop-loss to break even to protect profits and potentially ride further downward momentum. To refine the portfolio, I'll incorporate an RSI-based confirmation. If the RSI falls below 40 during the forecast period, it signals increased selling pressure, strengthening the short position. Conversely, if the RSI rises above 55, it suggests weakening of the downtrend, prompting a partial exit or adjustment of the stop-loss. I recommend allocating 60% of the portfolio to this short strategy, 30% to a conservative hold, and 10% to a waiting-to-see position, observing market reactions and adjusting accordingly. The final target price for this short position will be $8.67, and a trailing stop-loss will be implemented to maximize potential gains. Based on the historical data and forecast, Uniswap shows a declining trend. The price has been fluctuating within the support of $3.24 and resistance of $3.67 for the past 2 weeks. The RSI values indicate that the asset is currently in a neutral to slightly oversold territory, with values fluctuating between 38.8 and 59.9. The Bollinger Bands show that the price has recently touched the upper band, suggesting a potential pullback. Considering this, I recommend a short selling strategy with an entry price of $3.7. Place a stop-loss order at $3.75 to protect against unexpected upward movements. Set a target price of $3.44, aiming to capitalize on the predicted downward trend over the next week. To refine the strategy, I suggest incorporating RSI signals. When the RSI falls below 20, oversold, consider a long position. When the RSI exceeds 80, overbought, consider a short position. The Bollinger Bands can confirm these signals. If the price touches the upper band and the RSI is above 80, it's a strong sell signal. If the price touches the lower band and the RSI is below 20, it's a strong buy signal. Combining these indicators, a portfolio can be created where 60% of the capital is allocated to short selling based on the overall trend and 40% is allocated to RSI and Bollinger Band signals for opportunistic trades. The entry price for shorting is $3.7, the stop loss is $3.75, and the target price is $3.44. For long positions based on RSI and Bollinger Bands, the entry price will be determined by the oversold level, the stop loss will be slightly above the center of the Bollinger Bands, and the target price will be determined by the resistance level. Based on the historical data and forecast, BNB shows a declining trend. The price has been fluctuating within a range, with support around $612 and resistance around $628. The RSI indicates that the asset is generally within the neutral range, occasionally dipping into oversold territory but not consistently. The Bollinger Bands suggest periods of volatility, with the price occasionally touching the upper and lower bands. Considering these factors, I propose a cautious strategy focused on short-term opportunities. My strategy involves a combination of RSI and Bollinger Bands. We will enter a long position when the RSI falls below $45, indicating an oversold condition. The entry price will be $623. The stop loss will be set just below the support level at $610 to protect against further downside risk. The target price will be $635, aiming to capture a moderate upward movement. This strategy will be executed for a duration of 5 days. If the forecast indicates a continued downward trend, we will consider a short position when the RSI exceeds $70, with an entry price of $624, a stop loss at $630, and a target price of $615. This approach balances potential gains with risk mitigation, aligning with a high returns investment expert's perspective. Based on the historical data and forecast, PancakeSwap shows a slight upward trend with periods of consolidation. The RSI fluctuates between 45 and 65, indicating neither strong overbought nor oversold conditions consistently. The Bollinger Bands have been widening recently, suggesting increased volatility. The support price has remained consistently at $1.3, while the resistance has been around $1.48 to $1.52. Considering the recent upward momentum and the forecast prices hovering around $1.4, I recommend a moderately bullish strategy. We will implement a strategy based on RSI and Bollinger Bands, focusing on short-term price movements. Our strategy will involve entering a long position when the RSI dips below 40 and the price touches the lower band of the Bollinger Bands, indicating a potential oversold condition. Specifically, we will enter a long position at $1.39. Given the support level at $1.3, we will set a stop-loss order at $1.3 to limit potential losses. Our target price will be $1.48, aligning with the recent resistance level. If the price breaks above $1.48, we will adjust the target price to $1.52. This strategy combines the signals from both RSI and Bollinger Bands to maximize potential returns while minimizing risk. Based on the historical data and forecast, Bitcoin Cash demonstrates a generally upward trend with periods of consolidation. The RSI consistently hovers around the 30 to 50 range, suggesting neither extreme overbought nor oversold conditions for most of the period. However, the recent dip in RSI values indicates a potential short-term oversold condition. Combining this with the forecast, which predicts a slight downward movement initially followed by stabilization, I recommend a long position with a cautious approach. Entry price should be $455+. The stop loss should be set slightly below the support level at $444+ to mitigate potential losses if the price declines further. The initial target price should be $463+, aligning with the forecast high for the week. To refine the strategy, we'll incorporate the Bollinger Bands. The price consistently trading within the band suggests a period of consolidation. If the price touches the lower band, it can be considered a buying opportunity. Given the current RSI and forecast, I recommend a layered approach. If the price reaches $455+, enter a long position with a stop loss at $444+ and a target price of $463+. If the price continues to fall and touches the lower Bollinger Band, consider adding to the position with the same stop loss and a higher target price of $474+. This layered approach allows for capitalizing on both the initial forecast and potential rebound from the lower band. Based on the historical data and forecast, World Liberty Financial shows a downtrend with periods of consolidation. The RSI consistently fluctuates below 50, indicating a lack of strong bullish momentum. The recent dip to $0.0925 on March 22, 2026, with an RSI of 33.8 suggests an oversold condition. The forecast for the next week predicts a slight upward movement, but remains below the recent resistance of $0.101. Considering these factors, I recommend a long position with an entry price of $0.0978 on March 23, 2026. Place a stop-loss order at $0.0961, just below the support level, to limit potential losses. Set a target price of $0.101, aligning with the recent resistance level, to capture a potential upward move. To enhance the strategy, I will incorporate the Bollinger Bands. The price is currently near the bottom band, which often signals a potential bounce. However, the forecast data suggests a sideways movement initially. Therefore, I will implement a conservative approach. If the price breaks above the upper Bollinger Band of $0.109, consider taking partial profits. If the price falls below the lower Bollinger Band of $0.0921, tighten the stop loss to $0.0951. This combined strategy, integrating RSI and Bollinger Bands, aims to capitalize on short-term price movements while mitigating risk. Based on the historical data and forecast, Falcon Finance shows a slight downward trend with volatility. The RSI fluctuates between 37.9 and 47.6, indicating periods of oversold and overbought conditions. The Bollinger Bands suggest that the price is currently approaching the lower band, which could signal a potential bounce. Considering the support level at $0.0706 and the forecast indicating prices around $0.0713 to $0.0722, a cautious yet opportunistic strategy is warranted. I recommend a long position with an entry price of $0.0716, placing a stop-loss order at $0.0706 to protect against a potential breakdown of the support level. The initial target price should be $0.0722, aiming to capture a short-term upward movement. To refine this strategy, I'll incorporate the RSI and Bollinger Band signals. When the RSI falls below 30, oversold, consider a long entry. When the RSI exceeds 70, overbought, consider a short entry. When the price touches the lower Bollinger Band, it is a strong indication of a potential bounce, and a long entry is warranted. Combining these signals, I suggest a long position with an entry price of $0.071, a stop loss at $0.0706, and a target price of $0.0722. This strategy leverages the potential for a bounce from the lower Bollinger Band while incorporating RSI confirmation for added confidence. This portfolio combines the three strategies and provides a high-return investment opportunity. Based on the historical data and forecast, SUN token demonstrates an overall upward trend. The price has been consistently moving towards the upper range of the Bollinger Bands, indicating bullish momentum. The RSI values, while fluctuating, have generally been above 40, suggesting that the asset is not significantly oversold. The forecast for the next week predicts continued price increases, reaching $0.019. Considering these factors, I recommend a long position strategy. Our entry price will be $0.0179, coinciding with the start of the forecast period. Given the recent price action and the forecast, a conservative stop loss will be placed at $0.0176, just below the recent support and the lower Bollinger Band. A more aggressive target price of $0.0188 is set, aligning with the forecast peak and the upper Bollinger Band. If the price continues to rise, we can adjust the target price to $0.019. This strategy combines the trend analysis, RSI indicator, and Bollinger Bands to maximize potential returns while managing risk. Based on the historical data and forecast, DASH shows a downtrend, with the forecast prices consistently decreasing from $32.7 to $31.4 over the next week. The RSI values fluctuate between 41.5 and 54.3, indicating periods of neither strong overbought nor oversold conditions. The Bollinger Bands show a contraction, suggesting a period of low volatility followed by a potential breakout. Given this information, I recommend a short selling strategy. We will initiate a short position at $32.7, anticipating a further decline. To mitigate risk, a stop loss will be set at $35.7, just above the upper Bollinger Band. The target price for this short position is $31.4, aligning with the forecast low and the established support level. To refine this strategy, we can incorporate the RSI. If the RSI drops below 20, indicating an oversold condition, we will close the short position and consider a long position. Conversely, if the RSI reaches 80, suggesting an overbought condition, we will close the short position. For the initial short position at $32.7, the stop loss remains at $35.7, and the target price is $31.4. This portfolio combines the trend analysis, RSI signals, and Bollinger Band insights to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Kite has been in a downtrend, consistently hitting lower lows and lower highs. The support price remains stable at $0.194, while the resistance has been breached multiple times. The RSI indicates oversold conditions, fluctuating around 40 to 47, suggesting potential for a short-term bounce. The Bollinger Bands show the price consistently near the lower band, reinforcing the downtrend. Considering these factors, I recommend a contrarian strategy aiming to capitalize on a potential short-term rebound. My strategy involves a long position with an entry price of $0.219. The stop loss will be set just below the support level at $0.194 to protect against further downside. The initial target price is $0.231, aligning with the forecast price for March 29, 2026. If the price reaches $0.231, we will move the stop loss to the entry price of $0.219 to secure profits and manage risk. This strategy combines RSI oversold signals with Bollinger Bands confirmation of a potential bounce, aiming for a high-risk, high-reward trade with clearly defined entry, stop loss, and target levels. Based on the historical data and forecast, DeXe exhibits a strong upward trend. The RSI consistently remains above 70, indicating overbought conditions, but the price continues to rise, suggesting strong buying pressure. The forecast for the next week projects further price increases, with a peak near $8.28. Considering the current RSI and Bollinger Bands, I recommend a long position. We will enter a long position at $6.87. Given the support level at $6.86, a stop-loss order will be placed slightly below it, at $6.75. The initial target price will be set at $7.66, aligning with the forecast price for March 26, 2026. To maximize potential returns, I suggest a dynamic trading approach. Once the price reaches the initial target of $7.66, we will move the stop-loss to break even at $6.87, securing the initial investment. Subsequently, we will adjust the target price upward, aiming for $8.28, the peak of the forecast. This strategy combines RSI signals, Bollinger Bands analysis, and forecast data to capitalize on the upward trend while managing risk effectively. The final target price will be $8.28.